It's actually not difficult to see what Solana USDT is trying to do here. So we are playing an inversion fair value gap game. This video is actually to educate you about how smart money delivers price using a failed fair value gap. And a failed fair value gap is called an inversion fair value gap. So as you can see here, alright, good evening guys. My name is Hyper and I'm here to teach you my setup of how I see and trade smart money concepts. Alright, and my strategy is inversion fair value gaps, and what you are going to learn from this channel is first hand what smart money does when they deliver price from imbalances, because that is what the market is all about: imbalance and external liquidities. And that's all. The market, when it becomes imbalanced, it is rebalanced, and then the next point is external liquidity. So let me take your eyes to this point. This is Solana USDT intraday framework for for yesterday. Yes, this trade was my Wednesday trade, and on this one right here, guys. This is not a financial advice, so it is best that you know that this is for educational purposes only, and I am not a financial advisor in any form. All right. So price sweep out this liquidity right here. As you can see, once this was swept, we confirmed an uptrend when price broke or closed above this level in price. So take your eyes, I want you to take your eyes to this low that is in this displacement leg that took out this sell side liquidity. The reason I am actually taking my time to pinpoint this is that it is easy to see in the market, and when you are able to see it every day, you will notice that there is something that changed about your trading: liquidity. All right, you will notice that something really changed about your trading. All right, so one thing you have to understand about displacement legs that take liquidity is that inversion fair value gaps, or rather fair value gaps that occur in them, is a very important point in price. Why? Because that is where there is an imbalance in the delivery of buy side and sell side liquidity, as the case may be. So this fair value gap was formed when price took out this external liquidity. All right, if you don't know what a fair value gap is, a fair value gap is literally when you are looking at three candles in price delivery, you are seeing that. Guys, you are welcome to my live stream. I'm teaching my intraday strategy. All right, I'm a day trader, and this is what I do. Guys, you're welcome to my live stream. to my live stream. Where are you watching me from? All right. So, for the sake of references, because I don't know who might be watching, I better not assume that everybody knows what a fair value gap is already. So, let me just do my due diligence. So, the low of this candle, I'll increase it to like control, click and drag, will duplicate it automatically. Okay. So this fair value gap right here is considering the low of this candle and the high of this candle. There is no buy side delivery, only sell side. So this is a sell side imbalance. All right, a CB. It is a CB, sell side imbalance, buy side inefficiency. All right. There was also a sweep of liquidity here, but this one was immediately rebalanced. So from the low of this candle to the high of this candle is a fair value gap, and once price closed above this fair value gap with this candle, it has switched its role to an inversion fair value gap. And guys, I want you to recall that a fair value gap is supposed to send price down once price reaches to that level. A fair value gap, or let me say a bearish fair value gap, is supposed to send price down once price completes filling it in. That is when buy side is completely delivered. Now, in the case where you start to see price closing above your inversion fair value, closing above a fair value gap, that fair value gap has turned to an inversion fair value gap, and that is where the whole magic happens. You can call it the holy grail if you may, but understand that liquidity void, fair value gaps that are inverted, are where smart money starts to build a new position. Let me bring your eyes to that so that you can understand what I'm saying. Nobody is going to tell you what they are doing, but you have to put your eyes in to see what's going on. Okay, it is actually fun to see all these things in the chat. So we are in a bullish scenario, and I want to show you how inversion fair value gap is used by smart money to deliver price. I don't know if this is thick enough. Let me just thicken it a bit. I think this is 50. It's okay. This was a fair value gap, but once price closed above this candle here, okay, this is the low of this fair value gap, and we have the low coming in at 158.85. Okay, so this candle closed at 158.95, which is already invalidating the whole purpose of this fair value gap by sending price down. We expect price to continue going to the downside. All right, so once this has been invalidated, this fair value gap is now an inversion fair value gap, and once price retraced into the consequent encroachment, that is like the midpoint of this fair value gap. If you don't like the rectangle tool, you can actually use your Fibonacci. You can also use your Gantt box. All of these rectangles have a midpoint that is the same. It's just simple Fibonacci. I enjoy using my rectangle tool. So if you double click on your rectangle tool and click on style, you will see a middle line. That is how I have mine there. So midpoint price delivers to the upside. Now look at this fair value gap. Price was trying to go down. Smart money tried to deliver price down, but as you can see here, there is a candle close above here, and it is not a matter of the bears getting tired of sending price down and the bulls are getting stronger than the bears. This is algorithmic price delivery, because price runs on an algorithm, and you have to understand how smart money delivers price using imbalances, rebalancing of imbalances, and targeting the external liquidity. So permit me the time to break this price action down so that you can actually go into the chart to see what I'm doing. Okay, if you are new to my channel, please subscribe to my channel. I will appreciate every subscription as I put out this educational content out there. So invalidated fair value gap rather. So once this fair value gap is invalidated, I like to see price return to the midpoint before taking my entry from the midpoint or the consequent encroachment of this inversion fair value gap. And if you take your eyes here, you will see an engineered liquidity. Yes, you will see an engineered liquidity, which is like an internal low that was swept. Alright, so we now have a fair value gap that was formed when price took out this low. Alright, price action is actually fractal. So what happens on the 1 minute chart happens on the 10 minute chart, it happens on the 1 year chart. Okay, so this little internal liquidity price action is what we saw here. Once price took out this sell side liquidity, we started seeing inversion fair value gap being used as a point of reference to send price to the upside. So this inversion fair value gap right here is the point of reference for price delivery to the upside. So I like to enter with my consequent encroachment here. Eyes on idea life. How you doing now? Eh? You don't press my hand though. And why I will give you reaction when I lay life? No. I'll, my life cannot be destroyed. Anything that okay destroy. They go like uh, Chineke God oh, I forgot. I forgot to. No, this hand they pay me before. Like 1 month now. You know, well, your own is actually okay. Maybe one day you go take soft now. How? Now my own you they use measurer. I would stop this ajebo in Jesus' name. No, I don't like it. All this. I want to be backo. I want to be backo where we. Mm. Yes, streetwise, sir. Streetwise, sir. Now why? No, Allah. Even me self. Even me self. So that is it for the get out of here. Eh, eh. I am. No, Allah. I will text you. Hmm? I don't have money. Thank you. You're welcome. Hey, I wish say all those energy they enter my own clothes. Sorry. So sorry for the disruption. Some funny family issues. All right. So where did we stop? I think I stopped at pinpointing fractality in price. So I discovered a new tool, demonstration. Yes, I discovered this demonstration tool, and I think I will use it very well. I will need it for my live streams as my pointer. So this inversion fair value gap right here supported price up. Once price closed above it here, it retraced to the midpoint, short price up. Price reacted, but there was a continuous bullish price delivery, as you can see, indication that this fair value gap has been invalidated. You need to train your eyes to see this. Use your triangle, use your rectangle tool to mark it out always. Wait for price to close above it, then enter on the midpoint for a bullish scenario. So this price action is exactly what we also have here. So once price closed above it, as you can see, let me zoom in quickly. Actually, price did not tap into this midpoint right here. It was like an explosive move. All right, somebody that trades order block might have gotten to play this. Okay, someone that trades other blocks might have gotten to take this position right here. Okay, but if your eyes you have trained your eyes to see inversion fair value gaps, most of the times when you are on the chart you are likely to see inversion fair value gaps. That is how the brain works. The brain wants you to give it something it is going to see at the twinkle of an eye. Okay, so that is basically what I trade, inversion fair value gaps. So once this inversion fair value gap has been tapped into order block, this was the next external liquidity to be taken right here. Buy side. This is buy side liquidity. In form of a relative equal high. Alright, this is a relative equal high. That is how I know for sure that price is going there. You have to train your eyes to see a relative equal high. Okay, you have to train your eyes to see a relative equal high. Now, in case any of the viewers don't know what a relative equal high or a relative equal low is, I want to, you know, still do my due diligence on this one. So let us assume that we have not seen this. Let me remove this one. Let us assume that we have not actually gotten to this point in price. All right. Can I actually shade this? So we are assuming that this green portion has not yet happened. Okay, that's what we are actually assuming. I want to show you what a relative equal high is. A relative equal high is that high that you look at and you say, that is a trap. I am not going to put my stop loss there because my ass will be whooped. Sorry for the language. So observe this price action. I want to draw it for you. Can I actually use here? I want to draw it within. I want to actually draw it within one sweep of liquidity, break of structure, change of character, or whatever you call it. Then a relative equal high looks like this. It is a high that is hanging and it has not had any form of sweep of liquidity to the right side. Okay, no liquidity has been swept, so it is a kind of an open high, just like you will see here. This high was the highest high, so it is safe to say that this whole structure and this structure is the same thing. So relative equal high here. So let me now remove this. I will continue to digest comments from members and you know, putting out better explanations of how you can see this relative equal high easily and know its structure. All right, so relative equal high here, my target was that high because I knew it was an open high. I knew price was going there. I didn't have to second guess because I know what a relative equal high looks like, and that is a 3.7. That's like 3.7 or whatever the outcome was, but I got out of this position right here. Then you notice explosive how explosive smart money took price. It was like everybody that had their stop loss above here, they were looking at price and they thought that this is resistance. Price came here and dropped, came here and dropped, came here and dropped. Therefore, here is resistance. All right, basic price action, price action that might get you killed. All right. So what I'm saying is that not all equal highs are resistance. You have to know when they are relatively equal. That is when the price is open and screaming for stop loss to hit it. You don't want to put your stop loss there. That is the first basic of surviving in this market. You have to know where price is going. You have to know, because if you don't know where price is going, how do you know the position to take? I want to get that through. You don't even know the position to take, because when I knew that price was going here first, I knew that I would be looking for long setups. If I didn't know that price was going up here, I wouldn't be I may have as well taken a short setup by saying, all right, this was a supply zone. Balanced price range. fair value gap. This is a fair value gap. Previous high broken, turned to support. This is pure price action. This is pure price action. If you trade fair value gap, you may have seen your setup here, because once this high was broken, you could have easily used the rectangle tool to mark out. I think I should zoom in a little bit to mark out the high of this candle and control and the low of this candle. There was no sell side delivery right here, so this is a buy side inefficiency, BC. It was coined by ICT. So if you trade fair value gap and you have trained your eyes to see fair value gaps, this is algorithmic price delivery, and it is not random. There is nothing random about these setups, and if you train your eyes to see it in hindsight, you can't even imagine the kind of light years ahead you are than more than 90% of other traders. What else do we see here? What else do we see? As usual, there was a sweep of liquidity here. Inversion fair value gap. During the process of this sweep of liquidity, there was a fair value gap formed. So sweep of this low, this was sell-side liquidity taken. The low of this candle to the high of the third one. Inversion fair value gap. I hope you guys can actually see this, or I should increase my font size to 14. So this fair value gap was invalidated. Can I at least change the color of this stuff? Okay, looks better now. So invalidated fair value gap with the close of this candle, which made this fair value gap and inversion fair value gap. Smart money started to deliver price to the upside. Do we see once price was tapped into this origin, we have a relative equal high here. Yes, we have a relative equal high here. Why? Because after this, let me draw our favorite skeleton for you so that you understand what I'm saying. Because from this low to this low to this high to this low has a shape. It has a shape that you have to learn how to see. this low was taken, pointed this low, the inversion fair value gap is somewhere in between the midpoint of the fair value gap that was formed when this low was taken. So break of structure. This right here is an open high. It is an open high because price has not yet attacked this high, and it's kind of showing you that there is a kind of waiting. I don't know how to actually frame this thought, but this high right here is open. It is a relative equal high. It is an open high. It is an unsafe high where you should be putting your targets and not. Thank you guys, my food just landed. This is delicious. Wow, God bless the hands that made this food. Amen. I'm very hungry. So I want to quickly show you what this looks like in a bearish scenario so that you can frame the opposite side of what I'm saying. So in a bearish scenario, we are expecting to see something like this. Hold on. In a bearish scenario, we are going to see something like this. Once there is a high taken, there's a fair value gap formed here. So this fair value gap here, and price breaks this high, it comes down. So there will be various lows, but this low right here is a low that is pointing out. It is like waiting for price action to kind of sweep into it. Okay, it is waiting for price action. So if you are bearish, you are looking for relative equal lows on this part of the chart. All right, I don't know if I have explained this too much, but in the subsequent videos I'm going to actually break things down on how to see a relative equal high and a relative equal low. But if you can see it at this moment, congratulations. So some traders, depending on what works for you, you can enter when you don't see price coming back to the midpoint of your inversion fair value gap, just like I did on this position. I did not wait for price I did not wait for price to come back, because this whole price action is forming on yesterday's low, and seeing a fair value gap being inversed on the daily close is a strong bullish signal for me. So just like I've illustrated for an uptrend, we can see that there is an open high. Okay, if you can see it now, congratulations. If you cannot see it, please go to your charts and take a screenshot of what this looks like, and keep on practicing, keep on practicing, keep on practicing until you are perfect with this. Okay, inversion fair value gaps is actually a safe haven for me because it delivers consistent 2 to 3 risk reward, 4 risk reward, 5 risk reward. Okay, even though, God, I forgot I'm carrying my food. Even though I don't chase for the big moves, I always go for home runs. Sorry, not home runs rather, but what's it called? What's that baseball term? singles. Yes, I always go for singles and not home runs. Yeah, so that is basically all that I have for this video, guys. I hope somehow you have understood what a fair value gap is, what an inversion fair value gap is, and what a relative equal high is. So for this position, we also have the same bullish price delivery going on. This high is open. Understand? Look at what's going on here. This high is open. So this low was swept when price dipped into this level. It was swept, and during the sweeping of this low, a fair value gap was formed, and this fair value gap was invalidated when this candle closed above the fair value gap. And this blue line is yesterday's daily close. Strong magnet. It is a strong level on your chart. If you can activate it on your trading view, or if you want to activate it on your trading view, if you go to your chart settings under the scales and lines, scroll down, you will see the previous day close. I choose the value and the line, alright, and my color is blue. That is how I have this blue line here. Previous day close, strong level, strong smart money level. Alright, it is a strong liquidity pool. Go through your chart, you will understand and see how price reacts with it. So the same thing that was going on here is going on here. The same thing that is going on here is going on here and is going on here. Now imagine if you learn how to see this every day and you're able to make your daily 2 risk reward trades. So that will be all for this video, guys. Please subscribe to my YouTube channel and please subscribe to my YouTube channel. I'm actually very hungry. I want to eat now, but there will be a recording of this video. I might actually upload the recorded session if time permits me, so that you can see how we framed these 3 positions using an inversion fair value gap. So guys, I will actually call it a day, and I will see you on the next one.